Gotta do one more. All right. Start off like that. Go like that. Oh, it still does it. Need a word wrap. Start out here. One moment. Gotta make it look nice, right? All right. All right. Perfect. Think I'm good. Think I'm good. Am I good? Is it the 11th? Did I label it wrong? No, 11th is right. Gathering 11. Am I good? Am I live? I'm live. All right. Ladies and gentlemen, we're going to go across 2019 intraday solutions. What's actually working now in the current environment? We're going to discuss all that and more. I am Mark Melnick, and this is the Newsbeat Live Evolutionary Gathering number 11. Whoa, cut that out short. Well, we have a lot of good stuff to get to anyway. Good morning, ladies and gentlemen, or good afternoon, or good evening, depending on where you're logging in from. Welcome to the Newsbeat Live Evolutionary Gathering. I am going to show you what works today in the market, things that you could actually look at your chart to determine what stocks you should be actually intraday trading so you avoid you avoid the duds and you capitalize on catching the good ones. It's been a very difficult year for a lot of people. I'm actually having my best start to the year tenfold over my entire career. That, of course, is thanks to our number one stock of the year, but I've also been making money every day on the intraday as well. And I stopped and I looked back and I said, what am I doing right here? What shouldn't have I been doing? What have I been avoiding? And what have I been doing right? So I had the hours to put in some statistical analysis for you. And I want to share with you the results, but nothing is really free. You didn't think I was just going to give this out to you. First, I would like to say thank you to myself, Mark Melnick, and T3. If you wish to continue watching this video, you solemnly swear and will copy down everything that I am saying right now that you hold harmless, not liable for anything, Mark Melnick and T3 Live for anything said, listened to, spelled out, shown, viewed, thought about, dreamt about while watching this video. If you do not agree to hold Mark Melnick and T3 Live harmless to everything, you must exit this video immediately. Well, now I got to do something for you. Thank you so much for agreeing to all that. I know it's something that you weren't looking forward to on a Sunday. Like, oh man, I got to do something for this guy, right? Well, here's the good news. Your contribution is done. Now I want to contribute to you. So we've seen what has been happening. We really saw what was happening here in the market here, and we saw like a lot of weird stuff, and it became kind of like interesting in a way. Let's see, no, we'll put that back up. It became kind of interesting in a way of the names that have been working and the names that have not been working, and I just want to take you right over to the charts real quick because I'm going to not be focusing on overnights on this evolutionary gathering. I'm going to show you actually what's working on the intraday. So you saw what happened on Friday. If you didn't, I mean, we started off with the tightest range this year. We put in a triple Q's range of $1.07. Spiders had a range of just under $2, $1.98. But for the triple Q's, you had the tightest range in a very, very, very long time. In fact, I zoom out here and I struggle to find a tighter range day than what we experienced on Friday. And right over here, you'd have to go back to August 28th. August 28th, we put in a tighter range than that, but bottom line is it's going to be easily one of the tightest ranges in the past few years. Definitely top 20 tightest ranges in the market in the past few years. And that is the point I'm making. And it felt like, for a lot of traders that like trading is a bit of a struggle. Again, like I managed to come out ahead every time, but I had to really analyze where I screwed up. And just because I made money every day in the intraday doesn't mean I didn't have losses. Like I had losses intradays and thankfully more gains to make up for it. So I really had a good chance to see what I did right, what I did wrong. So what I did on, I want to talk about Friday. I think this is a good example because I was trying something new and I shared it, with all you Newsbeat followers. You could see 8:53 a.m., January 11th. I said, okay, I'm trying something new today, looking for 1 minute and 5 minute bear flags to have follow through on these names. And I should have probably also said bull flags because I was looking at Tilray Long, but you get the picture. I was watching Activision, Starbucks, Weight Watchers, GPS, PCG, short, and Tilray Long. Okay. Now, it's quite a number of names. You might stop and you might think for a second. You might say, okay, Mark, that is a lot of names. How do I know which ones are going to give me the best chance of a follow through? Now, throughout the video, when you actually do statistical analysis, you have to also remember that not everything works. And I say that in an extremely positive way. I mean, you will have the trader out there that will look at a name and say, okay, this didn't fit your setup, Mark. So you wouldn't have traded it, for example, long. Let's say I was bullish in a name and it didn't set up the way you wanted, but it shot up in the end. And I'll say, okay, how much money did you lose by not trading that? How much money did you make by not trading that? And the answer is zero. So it's not about trying to catch every single setup that'll work, all the time. It's trying to apply a methodology that if you follow this system, you're going to be right 70% of the time. Or if you followed my methodology that I'm about to share with you 83% of the time since the beginning of the year. Now, I say it like with my eyes like, 83% of the time. Not because 83% of the time isn't a phenomenal number. It's that the sample size from the beginning of the year is not a phenomenal number. I mean, we had what? 7 trading days, I believe, since the beginning of January. So, I mean, just looking back, I don't really have, the largest sample size on the planet in order to be utilized. So again, right over here, we started trading January 2nd, first day, 1, 2, 3, 4, 5, 6, 7, excuse me, 8 trading days since the year began. So I am going to share with you something that is 83% effective as of right now. I think this is very important. I think a lot of traders are just so disgusted with a lot of this market action that they don't know where to go next. And I'm going to reveal that to you, ladies and gentlemen. I'm going to show you exactly what's working. So I think using Friday as my first example, besides for being the last trading day, is also a perfect example because what happens is, oh, you see the little thing coming down, the little flap coming down. Yeah, that's my $5,000 AC unit because it's drilled outside. I can't believe I dropped that much for that, but it works. Anyway, and it's quiet and you can't hear it, more importantly, right? Do it for you guys. Um, all right. Tightest day in a very long time on Friday. Here were the names I'm watching now. What I'm doing is I'm picking out news names. I'm picking out news names. So every single name you see there, for example, had a news store, an analyst behind it. So, for example, on Activision, you had a bunch of analysts here downgrading the name because, warning about further company earning decline. So every single one of those names are a news name. Now, fair enough. Mark, you have 6 names. It's very easy to come back and say that one worked, that one failed, that one worked, that one failed, that one worked, that one failed, for example. And anybody can do that. And then what they'll usually do is they'll come to you and they'll say, look at the ones that work. Look what you could have did here off what we called. And they don't mention the bad ones. But ironically, I was only part of the good ones. Now, how did I do that? And I'm going to show you exactly how I did that through the analysis that I was researching over the weekend. So I'm hoping to bring you value for that. So let's start off. We're going to go down the list of every name again. That's Activision, Starbucks, Weight Watchers, Gap, PCG, and Tilray. All right. So first you start with a 1 minute chart. So step one, and we could, and this is what makes it more scientific than anything. Let me just increase the font so it's easier for you ladies and gentlemen to view. So let's start with step one here. We're going to say, look at 1 minute chart. I should probably use the number 1 minute chart. See if the first bar follows your bias direction. What does that mean? So, for example, my bias direction, and for example, the names I'm watching Friday when I was trying something new, I was looking for 5 short plays and 1 long. I was looking for 5 short plays. I was looking for 5 short plays and 1 long play. And of course, those short plays were Activision, Starbucks, Weight Watchers, Gap, PCG, GPS is Gap, by the way, and Tilray long. So what does that mean? It means the first 1 minute bar for these 5 names here should be red, meaning open versus close, meaning wherever it opens, it should close red on the first minute bar. And Tilray on the first minute bar should be green, right? That's what it should be because we're looking at the 1 minute chart and we're going to see if the first bar follows the bias direction, long or short. If yes, take trade through one and done. If not, wait for next step. Very simple. So I'm going to show you right now. So I ended up taking Activision short in the morning. So in the morning, did I catch this whole big red bar move? No. But when it was actually digesting here, I actually caught it short. I actually caught this name short as it was breaking down here through 45.31. I didn't do the one and done. So even though I'm sharing strategies, um, that work right now, doesn't mean I applied all of them. I did my research over the weekend. I still made money on this by actually shorting here. I actually shorted through 45.31. Watched the stock plummet to 44.69. It dropped a quick 60 cents in less than 60 seconds. Headed a little lower to 44.47. Dropped a little over 80 cents in 2 minutes. Gave me a quick opportunity to make money, and I took it. And I took it. And I took it. And it was a very solid call. Okay. So that was Activision, right? But even if you shorted here through the one and done, you would have a stop near the day high and it would have worked. And just showing you hindsight, even though I shorted it a little after, it still would have worked. Let's look at Starbucks. Starbucks one and done. You put in a red bar. Here's the first 1 minute bar from Starbucks on Friday. And again, I'm not just nitpicking names. I'm going through everything that worked and didn't work on my list. So far, if you did the Activision short one and done, you'd be successful. If you did the Starbucks short one and done, I consider this successful because you basically went from 62 bucks and you dropped about 30 something cents in a couple minutes. And again, you're on a 1 minute chart. You are looking for the quick trade. So let's be clear. Now I'm going to show you how you could look for a not so quick trade on the high five, where you could hold for 5, 10, 15 minutes before you make your money, or longer. Just follow the steps. So on Starbucks, one and done, if you shorted through the 1 minute candle here, there was ample opportunity, especially in a Starbucks, to make money because those puts move. They're tight and they move. So that would have actually been a really nice, simple trade in Starbucks. Next on my list was Weight Watchers short, WTW. And by the way, if you don't know what these one and done and these strategies are, I actually share them within the video description. So you could just go after this video and watch them and it'll explain to you exactly what I do. So the next one on the list was Weight Watchers. Ha, this is a funny one. Because even though the one and done would have worked, you notice you put in a green bar. So I would have ignored this one. I mean, I ended up ignoring it, but I'm talking for future reference. I will ignore this one again in the future. You put in a green bar, you spiked up, and even though you had a short opportunity through the one and done short, and the strategy actually would have worked, you just avoid this one because you see the green bar and you just step away and you say, that's okay if I miss it. You step away. So even though the one and done would have worked, we're going to say that Activision worked, Starbucks worked, and Weight Watchers was an ignore, even if it would have worked. Okay. And next on the radar is GPS. GPS, another example of the one and done short working a little, not a lot, but you would have ignored it. And look, you would have had a big up move. So if you didn't cover it super quickly, you would have lost. You ignore gap because you put in that first minute green bar. Again, you don't know what the first 1 minute green bar is going to look like when you're looking at the name in the pre-market. That's why I'm probably going to share with you my setting. I'm going to share with you, well, how do you track all those names on a 1 minute really quickly, Mark? That seems a rather a difficult endeavor, and you have to just simply do what I do when watching all these names, and I will show you exactly what I do. And you simply do this. I'm just gonna, whoops, simply do this. And you could see I have a 1 minute chart of Activision, Starbucks, Weight Watcher, Gap, PCG, and Tilray. And I'll even teach you how to set it up like that. So you could just sit there and wait, and you're looking at the stocks, and you're waiting for a 1 minute bar to close, and you're like, oh, I wanted a short, I want to short these five names here. Here's Activision, Starbucks, Weight Watchers, Gap, and PCG, and I want a long Tilray. So you just step back, and you're just sitting there watching for the first bar to close, doing nothing. And as soon as one of them closes, you could type up the chart. You could pull up the chart, blow up on it. So, like for example, I was trading Activision. We had that initial 1 minute bar. So maybe I'll just blow up on Activision, blow up the chart on Activision, and just pull in the chart here and say, okay, I could just focus in here and focus in on my trading for that first minute bar to break. It actually makes it extremely easy if you set yourself up similar to how I did here. But we'll go through that. I think that's an important thing to go through at later. I just want to show you the methodology for now. So we are ignoring Weight Watchers and Gap short because they put in a 1 minute green bar. We would have took Activision and Starbucks short because you put in a 1 minute red bar. So far, the two that you would have taken would have worked. It's not about catching everything. It's about just making money. Next, we are looking for PCG short. Now this was a little bit of a more interesting one here because on PCG you actually put in that red bar. So PCG would have been an example of a failing strategy unless you really took that quick 11 cents real quick, which I'm considering that a fail. You put in the 1 minute red bar right here. You broke down below a little and you ended up ramping up. The difference in PCG compared to the other news names, especially if you're in the Newsbeat room, is PCG was the only one in which an analyst did not downgrade the stock's price target. That is the difference. So you might say, well, Mark, if you were just looking at analyst upgrades and downgrades, it wouldn't have been on your radar. The truth is, it was on my radar just because of volume. But for the sakes of this example, that would be another way to tweak it out. For the sakes of me teaching you this right now, I'm going to just consider PCG a failure of a trade because PCG still wasn't downgraded, but you had elevated volume and Moody's downgraded their credit. So we're just lumping it in together. So you would have had a chance to make 11 cents, and then what would have popped up against you, that would have been a failing trade. So far, right over here, out of these five names, two would have worked, one would have failed. So you would have been, considering you took every viable trade based on what I'm telling you, you'd be 2 for 3. Fair enough. Let's go to Tilray Long. So on Tilray Long, you're going to want a 1 minute green bar. Tilray Long didn't give you a 1 minute green bar. So you would have ignored Tilray. So for this right here, you would have been 2 for 3 on the names that I'm showing you based on it. Now, what I've realized is it actually works on a lot of other names as well. Like if you actually were watching like Microsoft and Apple and Google and Netflix, which a lot of you are watching, it could have worked out on a lot of those as well. But for just the sakes of the analysis here, let's just continue. So the next step would be um, look for a high one, low one on each name. All right. Now, again, the high one video is within the description. You don't have to watch it now. I'll explain it to you for the time being. There's a full video on what it means. It basically says you see this yellow line here. This yellow line here is an exponential. This yellow line that's tracking up the stock, it's an exponential 8 moving average. And what it basically says is after the exponential 8 moving, if you're looking for a long, after it pulls down to the exponential 8 moving average, you look for the break of the next 1 minute bar. If you're looking for a short and the stock rises and hits against that exponential 8 moving average, you short through the next 1 minute candle. So let's go ahead and see how this would work with Activision. So Activision hit this yellow line here for the first time between 9:47 and 9:48 on this 1 minute chart. Again, I'm just going through the names, showing what worked, what didn't. So you would basically, on the next bar, when you broke through 45.12, you would short it and you would have a stop at the top here. So the stock went from 45.12 all the way to 44.71. And again, this isn't a matter of 4 minutes. I mean, your stock literally ended up moving, 41 cents in 4 minutes on the slowest market day this year, which again doesn't mean much with the sample size, but one of the slower market days historically speaking, especially within the past few years. Okay, so fine, that would have worked here. So Activision would have worked. Next on our radar, Starbucks. Starbucks was a short trade, so you had to wait for the stock to come up here, hit the exponential 8, and break the next 1 minute low. So we tested right over here. You're waiting for the next low break. Didn't happen. The low is 51 cents, 56 cents, 70, 70, 72, 75. Bang, right over here. You broke 75 cents right over here. You would have been short right over here through 75 cents. Let's say you shorted Starbucks, let's say you shorted 74 cents, and you would have had a stop at 85 cents above this line. So let's say you would have had about a 10-cent risk, and you would have been short right over here. Notice the stock would have never stopped you out. And Starbucks afterwards, of course, drifted down quite significantly. So this was an extremely successful um, strategy for Starbucks because the low ones, which is the opposite of the high one, is when you have an upgrade long. Low one is the same strategy for a downgrade short. So it would have worked beautifully on Starbucks if you applied this strategy. Now, this is going to be important because if you're following any of the Newsbeat names, you're going to be able to apply everything I'm saying tomorrow and the day after and the day after and the day after until it proves us wrong. This is what is working today. I spent hours on my weekend trying to figure this out because, I was on the phone with, I probably made around 50 phone calls. I still have more phone calls to make today, and I'm going to still be reaching out to some of you guys. And again, I was told that, again, that I should charge 2,500 an hour for these calls. And I said, you know what? They need to be free because the people who need these phone calls aren't going to be able to afford 2,500 an hour to hear my voice talk to them over a phone line. So I was reaching out, spending my entire weekend reaching out to you guys. And if I didn't get to you, don't worry. I literally have a list of people here that I reach out to, and I haven't forgot about you. Listen to your voicemail. Some of you didn't pick up. Okay, back to the strategy. Low one short worked on Starbucks, as you can obviously see. Next one was Weight Watchers. So you have to wait for the test of the exponential 8 right over here. The bottom right, it hit right over here. The bottom is 32.57, didn't break. Bottom is 32.82, didn't break. Bottom is 33 right here. We're using the bottom of the 1 minute candles because we're shorting through the next break of the bottom. And then you short right over here, right through 33, right between 943 and 944. You break down right here with the stop of the top here of 33.35, and you could see you could have rode Weight Watchers all the way down. In 15 minutes, you would have made a sexy $1.50 in Weight Watchers maximum potential. I'm not saying you caught $1.50. Maybe you caught $1. Maybe you caught 50 cents, a quarter, 75 cents, 80 cents, 70 cents, whatever it is. It was a very successful low one strategy on Weight Watchers. And again, please know I am picking the worst day to use technical analysis. The worst day. And this is why Friday is such a good example. So I said, if you could work on Friday, you'll work on the majority of days. And for the sakes of this video, just so you know, I did go back on every single day this year. Again, small sample size. I get it. It's 8 trading days, but it's effective. Next was gap short, GPS. So what do? You wait right here. Hits the exponential 8 on the 1 minute right here. I know some of you guys, your eyes are wide open now because you're actually saying, holy either fecal mattered word or expletive word or made up word like moly, like holy moly. You see these things working. All right, so right here, you break through the exponential 8. You're looking for the break of the next bottom of a 1 minute candle. Doesn't happen, doesn't happen, doesn't happen. Bang, right here, you short, right through 25.07. You have a stop at 25.18. Pulls down to 24.96. Pops up to 25.16, never stops you out at 18, which is a penny above the top of this candle, and then falls down to 24.84 and then grinds down. This, and remember, this is a 1 minute strategy. So when you make 30, 40, 50 cents, a dollar on a 1 minute strategy, to me, that's like, wow, you're using one of the quicker time frames to make this money. So keep in mind, you're not sitting there all day trying to make 30 cents. This is happening rather quickly. So as you can clearly see, the GPS short on the low one strategy, exercising again my step 2 here. And just so you know, step 1, step 2, and step 3, which you haven't seen yet, all these strategies are in the description of this video. So you can literally see exactly what I am doing, um, to, capitalize on these intraday moves. All right, moving on along, the PCG short comes down right here, hits the exponential 8 right over here, doesn't break down, 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 right over here breaks 1748, heads as low as 1737. If you didn't take that 11 cents, you would have gotten stopped out for a minor 12-cent loss right here. If you put it this way, if you decided not to take 11 cents, you got stopped out for about 11 or 12 cents. And again, PCG would have been the one that I was just looking for volume parameters. It was the one that didn't have an actual upgrade or downgrade. But still, I'm counting it within the analysis regardless. You could have argued PCG would have failed. But again, in this case, you would have easily been able to make the argument that you would have ignored this one too. But for the sakes of this example, um, we're going through every name. PCG failed and the other 4 worked. Let's look at Tilray. You're waiting, it's an upgrade name. You're looking for a long. You're looking for this little yellow line here to test. And you tested it right over here. I'll zoom in so it's easy to see. You tested it right over here. So now you're looking for the next breakout of the top of a 1 minute candle. So you have 96.50 the top here, 96.47 the top here, didn't break through. You're literally chasing through the bar high. You can't get filled unless you're trying something else. 94.93 did not get filled here. Bang, right over here, breaks 94.93 in a matter of 5 minutes. In a matter of 5 minutes, you're up 4 points. 4 points because the stock goes from 94.93, let's call it $95, right to 99.07. You're literally up over 4 points in 5 minutes. And had you held it, obviously you would have been up more because the stock would have eventually gotten to 101 and change. What a beautiful return on Tilray. I mean, this is one of those names where you could take 300 shares and make like $1,000 on a very slow day with very tight risk. What do I mean by very tight risk? On a Tilray here, if you bought through 94.93, you would be risking $1.39 per share. And $1.39 sounds like a lot, but for a Tilray, it isn't. I mean, the reward justifies the risks because literally on the next candle, you're already, up more than that. And these are 1 minute candles. So obviously, Tilray worked phenomenally if you wanted to be part of that trade. So going back to our stat line, and then I'm going to answer questions in the room. Out of our 6 names, you would have been able to take all 6 of them, and 5 for 6 would have worked. I should probably add in the one worked. 5 out of 6 worked, which is phenomenal. It shows you the power of the high one, low one strategy. And again, on this high one, low one strategy, just move my mug over. Again, on this high one, low one strategy, there's an entire video which describes the strategy for free in the description. Just if you forgot what it was, which I've gone over it 100 times, it's there for you for your viewing pleasure. And the next one we're going to do is look for a high 5/low 5. It's the same strategy, just one is upgrade means you're looking for the breakout long, downgrade means you're looking for the breakout short. Look for a high 5, low 5 strategy would be your third step. So what I'm doing here is I'm showing you the different steps you actually take. You're actually looking in the morning for a one and done. Once that trade is over, you move on to the high one, low one strategy. Once that trade is over, you're looking for a high 5, low 5 strategy. It literally stair steps you from next step to next step and shows you exactly what you can do on your names. So with that being said, look for a high 5, low 5 strategy. You're basically looking for the same thing like the high 1, low 1 strategy, except you're using a 5-minute chart. That's the only difference. Sounds simple, right? If you understood the hours of statistical analysis that goes behind it, you would probably appreciate the simplicity a little further. Okay, so we're going to start off with Activision short right over here. And you could see um, right over here, you tested it. Just hold on, I just want to zoom out just so you could see the bars easier. I just want to zoom in to make it as clear as possible. So you opened up here at 46.29, you broke through 46.43, and then you pulled back right over here after testing this yellow line through 46.09. You hit 46.05, went down to 45.85. Activision would have been totally scalpable on a very slow Friday using a short strategy. Again, you might be looking at it and you might be saying, it's only 20 cents. But at the same time, you have to realize we're using the worst timing of the year on a Friday where the market is tightest. You don't control the market, but it's tighter than ever. I would actually, especially with the elevated volume here, I would have considered Activision successful on the low 5. Now on uh, Starbucks, 5-minute chart, right? You come up, you break through here. Once you break through here, you're just looking for the breakdown of the next 5-minute red bar. That's it. You can see it doesn't break down here, doesn't break down here. The lows keep increasing, the lows keep increasing. 63.15, 63.17, 63 and a quarter, and right over there, you see what happens. You're able to short through 63 and a quarter. Now, Starbucks was a little bit more of a pain in the butt because after a flush, it didn't return to you like a lot of money. It's not stopping you out. You have to understand, as you shorted here, your risk on Starbucks was 9 cents. So you have to take that into consideration that if you have a 9-cent risk in a name and you're actually up, you know, 14 cents, it's not that bad because when you short through this candle here, you're putting a stop at the top of the candle you shorted through. So right over here, you short through this 11.05 to 11.10 candle because the low broke. You set your stop at the top of that candle. And you can see it's an 8-cent range actually. So again, example in Starbucks, if you did decide to just stubbornly hold it, it would have gone against you about 12, 13 cents in a flash, and then would have worked with you all the way down to 62.78. It's really hard to say, it's really hard to determine if this would have really failed. Again, because the risk was so tight and you were up over 1.5 times what you were risking before having any chance of getting stopped out if you're utilizing the methodology. I really consider Starbucks not a great trade, not a terrible trade, but a successful trade if you're utilizing the methodology. So for the sakes of counting it now, I'm just going to ignore it because it was so tight anyway. Whether you made 1.5 or you lost one, I know people like to talk in terms of risk units. I don't like to think of trades in terms of risk units because I've never met a really successful trader who uses risk units. By really successful, I consider seven-figure traders really successful. I've never met a really successful trader that trades in terms of risk units where, I'm risking one, I'm trying to make I'm trying to make one. And the reason for that is because too many things can happen in between the market. An analyst can come out, news could come out, the market could shoot up, could shoot down. You have to be nimble and not look at your trades as I'm risking one to make one, or I'm risking one to make two. I mean, you follow that mentality and you are probably not a successful trader. Probably 90 some mid to high 90s, you're not a successful trader. It's all about being up money and taking the money. So even on a Tilray where you could have made 4 points, if you made 1 point in Tilray, which would have been almost impossible not to make, I think you were up over $1.50 within like 3 seconds. So it was just like, like rocket ship type move. You couldn't, I'm not saying you're making that 6, 7 points, which some of you did in the room, and I know you did, and that's fine. But in terms of Starbucks, just for the sakes of analysis, even though I consider it successful because you're up 1.5 times more than what you were risking, I'm just going to scratch it out on this one because I don't want to give myself the easiest wins, and I definitely don't want to say it was a failed trade if you're risking 8 cents and you're making 14. I'm just going to scratch that one for the sakes of our analysis here. Okay, moving on. Weight Watchers. The whole point is to show you a statistical frequency. All right, so right over here, Weight Watchers, you hit the 5-minute exponential 8 right over here. And now what you're doing is you're looking for the break of the next 5-minute bar. Now this one would have actually failed because you would have broken 32.41 here at 32.36, and it would have climbed up and stopped you out at the top here before obviously pulling down even further and then popping up at the end of the day. So I'm going to just write Weight Watchers off as a failed trade because it actually broke the 5-minute right here. Let's move my face back. It actually broke the 5-minute right here and failed. So for the sakes of argument, we're 1-1 so far. GPS, 5-minute bar test right here. You would have been able to short through 24.89. You would have hit 24.84. You would have been short here with a stop at 25.17. Again, you're dealing with like 28-cent risk and you're only up 3-4 cents. I'm going to consider GPS a fail on this high five strategy. So far, even though Starbucks you could argue was good, I'm ignoring that. Good is, again, I'm putting quotes behind it because you made 1.5 to risk one, but I'm scratching that. I'm going to consider Weight Watchers and Gap right here a fail. So Activision work, Weight Watchers, Gap failed. PCG, um, right over here, hits the high five right over here. Bottom here 1737, it didn't break. Bottom here 1737, didn't break. Bottom here 1738, didn't break. Right over here, you broke through 1738. You would have been able to short through 1738. The stock would have dropped to 1685. That would be 53 cents on a PCG. That was obviously a successful low five trade. It would have never stopped you out. PCG was a success. And Tilray, just moving along here, hits the exponential 8 on the 5 minute right over here. You could just see beautiful bull flag. We actually called it right here in the room as you were breaking out, and that was really a wonderful call. But I'm just showing you now what works. So right over here, you hit these exponential 8. You have to get above 98.35. You do it, and you grind up to 103.69. What do I mean by grind up? Like, how long would have it taken you to make those 5 points, to maximize, those 5 points in Tilray? It would have taken you between 10:35 and 11:55. It would have taken you an hour, 20 minutes. Again, I am not even going to begin to pretend that that's what you are going to make. I'm not here saying that, from 98.35 on this very successful trade that you would have made $5.34 the top. But honestly, to make a dollar right here as it jumped up was easy. To make two, three, $4 was pretty easy. I'm not saying you're selling the top here. So Tilray was obviously successful. So we have three successful, which was Activision, PCG, and Tilray, and two unsuccessful, which was Weight Watchers and Gap. And one of them that might have worked, I just scratched. So in this case, 3 for 5 worked. 3 for 5 worked on the high 5 and low 5 strategy. And again, you should read these videos. So let's say you took all of them. Let's say you didn't nitpick. Let's say you didn't cherry pick, as they say. Let's say you took all of them. You would have been, oh, you can't see because my face is in the way. Let me move that over. You would have been 10 for 14 success ratio applying my three algorithmic strategies, utilizing what we're actually saying here. The major change that was actually made in this methodology was actually on the one and done strategy, where you have to look at the 1 minute chart. So, does that mean, Mark, that you're changing another version of the 1 minute strategy to evolve with this market? Potentially. Maybe yes, maybe no. But for the time being, 10 for 14, that's hitting 5 for 7. That is an extremely good hit rate, if you will. And as I say, I will never bring anything to you lower than 70% hit rate. And you could see if you just do 10 divided by 14, you have a 71.4% success ratio utilizing this methodology. The high one, low one strategy worked the best, I guess, followed by the 1 minute, which again, small sample size, but this is one day. So if you literally did each one of these 10 for 14 trade, 10, if you actually followed exactly this methodology here and applied it on everything, which means, ladies and gentlemen, you would have actually taken all the trades. I think you could be 11 for 15, in all honesty, if you took that other one. You would have been forced through this methodology to, for example, to take every high one, low one strategy. You would have been forced to take every high 5, low 5 strategy. But on the one and dones, which you wouldn't have, because this added line right here, where you look at the 1 minute chart and you see if the first bar follows your bias direction. You're looking for a long. That first bar is in green. You're not doing the one and done. Even though it would have worked on some of the other names, if you just simply ignored it, you would have a 70% hit ratio. I think one of the biggest problems, ladies and gentlemen, is that a lot of people, when they're actually doing these one and dones, it tends to be the first strategy you do because you're looking for the break of the first 1 minute bar. It can be very disheartening if your first trade doesn't work, because then you're like, oh God, now I'm down money to start the day. It causes some form of psychological toxicity. So I think, it's very easy for me to show you that 10 for 14 success ratio and show you the P&L that backs, a nice P&L that backs it. But psychologically speaking, what wasn't mentioned here, which is actually being fixed, is the psychological damage of losing on your first trade. That always causes psychological damage. You start the day, doesn't matter what you lose. You lose $200, $300, whatever it is or isn't, $1,000, $2,000, whatever it is. As soon as you start the day like that, it's very hard to climb back. It's very hard to climb back. What you'll notice is the vast majority of traders, and this is another thing that I looked at my notes, the vast majority of traders out there actually, when they have their best days, you'll notice that they're actually up money on their first trade. It's funny. The best days for the majority of traders are, and you know what's funny? It actually didn't remain true for me. It remained true for me because my consistency ratio is so high. But other than that, I haven't seen any empirical statistical data for myself that actually show that if I lose on the first trade, that I'm likely to have a down day. And that's, of course, because I'm batting so high. Just the majority of the days I'm not losing money. And because we do breaking news trades and takeout, merger and acquisition, analysts, upgrades and downgrades out of left field, that I've had days where I went down, like I was looking last year, I had a day where I was down like $2,700 and I ended up like $47,000, like 46, $47,000 after commissions. And again, it had nothing to do with the fact that I was down 2,500 early. It just had to do with that a breaking news play just coincidentally and coincided with that day and came out. However, for the majority of you guys, and I'm just being straightforward with you, the majority of you guys will have a difficult time climbing back if your first trade doesn't work. So if you're actually looking for the best consistency here, well, according to this, and again, I get it. I'm using a small sample size, believe me, but I also, for the sakes of the timing of this video, I didn't use a million examples, but I promise you, you would see actually slightly better results than what I'm showing you. If you actually just did the high one, low one strategy, you would actually be batting 83.3%. If you did my high one, low one strategy on Friday, you'd be batting 83%. And I think that's a very important thing to look for because, especially for you traders who are struggling right now, that might be the best way for you to start. So I don't think you have to start here. From a psychological perspective, if I was, again, I don't need a psychology degree to help you in psychology. I have met psychologists who do insert fancy words and expletive words here for people, that they do absolutely nothing. I don't believe psychology degrees are necessary, for example, for me to talk about psychology. I don't consider it an expert field, for example, to be a psychologist. Now, that's not to say I don't have respect for a lot of the psychologists out there and the great work they do. All I'm saying is you don't need to be a psychologist to understand, teach, and improve people's psychology, just like you don't need to be a construction worker or a carpenter to put together a table, hang up the frames like I did in the back with the leveler. I had the little levelers going in and I hammered in the nails, and I don't do that for a living. Doesn't mean I didn't do a perfect job hanging up the two awesome photos behind me. That doesn't mean I didn't do an awesome job doing that. I don't have a computer engineering degree. Doesn't mean I can't replace the hard drive and do simplistic tasks like that. I think when it comes to trading, a lot of the psychology is simple. I don't think it's about revisiting your childhood, even though, believe it or not, that can have a very detrimental or positive effect on your outcome. So, what I've been doing actually recently is I've been putting together an entire psychology, trading psychology um, manual, course, book, teaching, seminar, writings, whatever. I don't even know how to label it, to be honest. There you go. You're talking to the person whose math SAT score was much higher than his verbal. With that being said, I think that's a very important thing to look at. So, again, from a psychological perspective, if you were suffering from psychological toxicity, I would actually say start here. Suffer, and I'll tell you how you suffer from psychological toxicity, even though I'm actually putting together long-term solutions from it. Start here. Just start there. Maybe end here. Just start at step two. It's the most consistent thing right now. It is by far the most consistent thing in the market. The high one, low one strategies. Why? I don't know. You might say, Mark, why is it working? And if you actually go back to, other days, other trades, and things like that, you'll notice that the low one strategy is actually one of the best strategies out there in this environment. And again, I couldn't probably give you the reason. I know a lot of you guys were watching Netflix. Here's Netflix on the high one strategy. For those watching the Netflix upgrade, which we were, right over here, you buy through 331.64. You're up $1.50 in 2 minutes. In less than 2 minutes, you're up $1.50. How nice of a trade is that? You wanted to do the high five strategy in Netflix? Bang, right over here. Look at that. Stock climbs up to 338 after you buy through 331.90 here on a beautiful bull flag. High five strategy would have worked beautifully on Netflix. You wanted to do the one and done strategy on Netflix? Beautiful. Beautiful. Would have worked out beautiful as well. But again, I didn't go over that. The truth is, this methodology works for the majority of names out there. I didn't do a back test on every single name in the market to see how they work. It's much easier to do a back test on a controlled group of names, and obviously the names I follow are very controlled. And I think that's what really is going to save people in this market is to follow consistent strategies. You want to know what the high one, low one strategy is? There's a description in this video. And what I'm going to do now is I'm going to answer questions in the room. I'm going to start. I'm going to start with you, Nathan. Just everybody else. I'm going to show you my setup. I'm going to show you the layout on how to follow these names very easily. I'm even going to show you how to show it. I'm going to even teach you how to set it up, Ann. And actually, Lee, Root. All right, I'm going to start with Root going down. But if you have any other questions, whether you're these people anyway, go ahead and ask. So I'm answering questions in the room right now. If you have any questions that you want to ask on Facebook or YouTube, I should get around to it. You can just go ahead and feel free and leave a comment in the comment section, leave a question. Tell me what you think about this. Tell me what you think about things that actually work in today's environment. I know not a lot of people are spending their time doing it. Heck, it's easy for me. I work my butt off all week. I could just spend it with my family right now and not care about anything else and anyone else and just do my thing. But I'm the person spending hours showing you what's statistically working now because I want to improve your trading and I want to bring you to that next level. So let's start with Root. And I'm going to be answering questions in the Newsbeat live room. I can't see my Facebook Live or YouTube feed right now, so if you have a question and you're listening on YouTube or Facebook, go ahead and ask. I promise I will get back to you. Okay, Root. High one would still be a strategy even if the first 1 minute candle's against your bias direction. That is correct. So what Root is saying, let's say I'm looking for let's say I'm looking for a Tilray upgrade, and Tilray, for whatever reason, puts in a red bar to start on the 1 minute. Would I be able, and it's a good example with Tilray, right? Would I be able here to do the high one strategy because the first bar was red? Yes. Take everything I'm saying literally, word for word. So with the one and done strategy is the top one. So I should probably label it one and done. High one. Just going to move my mug. And this will be the high five. I should actually probably post this. I'm going to actually post this on my Twitter right now. Hopefully it's enough. They're not going to let me tweet it all out. So I'll just cut and paste. And okay. So I tweeted it out. So yeah. So absolutely. So take it word for word, Root. So even if this first one and done wouldn't have followed my methodology, even though obviously the Tilray one and done work, you're ignoring it because you're following what I'm saying. You ignore this one and done, but you follow the high one strategy. That is exactly right. Okay. Lee, how do you know when to switch from the high one, low one to the one to high? Oh, beautiful. That's such an easy question. You start at step one, you wait for the one and done to finish, and after the one and done finishes, you'll usually be set up immediately after for the high one slash low one if you're looking for a short, or slash low five. I mean, they're the same strategy, just one is long and one is short. So you would just start with this. After that is done, you move on to this. And once that is done, you move on to this. And what you'll realize is 99% of the time, that's you're going to be able to literally step from one strategy to the next, and it just goes in that order based on the simple time frames, Lee. So just start with one, go to two, go to three. It's that simple. And would you please show again how you made one of the panels in your nine charts? Okay, so how do you track all this? Mark, what is that species again of trade? Oh yeah, human beings. We're human beings, Mark. How do we actually follow all those damn names at once? And I am going to show you right here, ladies and gentlemen. So in TC 2000, oh, whoops. In TC 2000, in free stock charts, you'll have a little tab here on the bottom right there on the bottom left. I have this tab. This is a save tab. You click it. What you do is they literally have pre-built layouts and starter layouts right here. That is with every software. So, um, sorry about that. So, if you want, go right over here. You see this 9 box window. You literally click that. Once you click that, and just to move my face, you have the same box everywhere. You literally just say, okay, I want this to be a chart and a candlestick chart, and then you have to edit it and edit it the way you want it, open versus close, filled, and you just do that for all 9 of them. After you're done, you just file, save as, or save, and you'll literally save the layout, and it'll come up automatically in the future. That is how you do it. Nathan, Mark, if you had a small account, could only do 1 or 2 day trades, which strategy would you use and what criteria would you use to pick the name? The criteria, that's an excellent question, Nathan. If I had a small account, basically what Nathan is saying, Mark, if you are under the pattern day trader rule, I can't take all of them. I can't take 14 trades. Heck, I take 3 trades and I'm screwed out for the week. I take 3 trades and I'm, under the pattern day trader rule. What do I do, Mark? Very simple. If you're under the pattern day trader rule, what I would do, and again, I'm not, but if I was, I would, I would do this. I would do this because that is your highest chance of success. I would just simply do a high one or low one strategy every single time. Good question. So that's what I would do. And the way the criteria is you'd probably have to take my master class to know how I'm picking the names. That would be my criteria would be based on the methodology I invented for analyzing analysts and picking the names they choose. Another easy way, Nathan, would be just to choose the names that are given to you here in the Newsbeat live room. I will always provide you the names, but if you're asking what criteria would I use to pick the name, um, the criteria that I taught, I mean, you don't have to take them as you could just get those names. But if you're actually asking, well, which high one or low one would you do? Let me take it a step further because there were 6 of them. Under the pattern day trader rule, it's kind of hard. It's kind of hard. At that point, I would just say, well, if I was trading a small account, like I'll give you an example, right? So if I was trading a small account,
En revanche, elle cultive.
if I was trading a small account, it might be hard for me to want to do Weight Watchers because the options are spread. The GPS options are spread. So is PCG and Tilray. So I would have probably ended up, even though they would have worked, but not as well as the others, I probably would have done maybe Activision and Starbucks short. At that point, you have to do what you're comfortable with. And given the high hit rate, I don't see you, you know, getting into a lot of bad trades. You're likely going to win. But in the case of a pattern day trader, like I don't know where your comfort level is. You have a very small account. You probably have some psychological toxicity, like we all do, in some forms or respect. I would probably stick with a tighter Activision or Starbucks and just do names in which you're comfortable buying and selling the options in. And that's how I would do it, Nathan. Hope that helped. Um, art, Nathan, depending on what you mean by small. If you change account to cash, then you could just need 2 days to settle. Oh yeah. So again, I don't exactly understand how pattern day trading rules work. Honestly, I don't get it because here's the deal. Like I went on my Robinhood account. I went on my Robinhood account and I basically was trying to turn off my pattern day trader, but because I do it only overnights anyway, it never marks any of my trades as pattern day trader. So I'm not exactly sure how it works. I've heard from some people you have a cash account, exactly what you're saying, Art and Chat. If you have a cash account and basically you have like less than a $25,000 account, I believe it is, 24,999 or less, you're under the pattern day trader rule effect. And I've heard from some people that they're trading just fine with a $5,000 account being active, making money. Then I spoke to people saying, no, if you're under 25K, you have to be under the pattern day trader rule. The problem is I don't have a lot of experience with the pattern day trading rule effect, and it will allow you to do more than one round trip. But if you make like more than like 3 or 5 of them a week, I don't remember the number, five round trips a week, Golan. Okay, so if you do more than 5 round trips a week, they'll like lock your account down for a few months or a couple months or something like that. So there's that as well. There's 3 trades in 5 business days. Okay, unless you get an overseas broker, right? So that's a very difficult thing to work around. I feel for you. There's a lot of people in that situation. That's how I would handle it. But if you find a way to do as many as you want, again, I can't recommend legally for you to change your broker into one that bypasses the pattern day trader rule. But if you're asking me what I would do, hell yeah, I would bypass the pattern day trader rule using anything I possibly could. Okay, Eric. The 1 minute trades have exact triggers to get in. It's an easy entry. That's correct. But some have difficulty exiting, either not taking profits and goes against me or taking too quickly. What is? What is? I think what you're trying to say is what do you do when you're in a position you don't take your profits quickly or the stock starts running against you? So the thing is on the one and done high one and high five strategy, there's a specific exit on every trade. And the beautiful thing is you know where you're getting stopped out every time. For example, in Tilray, you know that if you did a high one strategy, a one and done strategy here, which I just explained not to, but just for the example of it, actually, let's say we're following the rules, right, of what we spoke about. So you bought the trade right here. You bought through 94.93. You'll automatically know if 93.54 breaks. You got to get the insert fancy word here out of your position. That's going to come down to your psychology at this point, and that's why I've been designing this entire psychology course because I've been doing writings on my own psychological ways to fix trading, and you have to realize how much psychological toxicity I have had. I mean, I went through a divorce. I went through a pretty screwed up upbringing in a very bad neighborhood in Brooklyn, and I had a lot of psychological baggage, if you will. It's not like everything affects somebody else differently. It's not that I was in a very dirt poor neighborhood, for example. Like I know people who grew up extremely wealthy, parents worth hundreds of millions of dollars, and I know several people like this, not one example, and they're suffering from so much psychological toxicity. And you might be like, well, what kind of psychological toxicity do they have? They have all the money they want. If they blow up their account, they get a new one, and they could do it, blow up their account 100 times and get a new one, new one, new one, new one, new one. What kind of psychological toxicity do they have? And let me tell you, you have seen nothing yet if you don't think those people suffer from a psychological perspective just as much as um, somebody who comes from a very poor neighborhood. I actually took these steps to solve and cure my psychological toxicity. So it's like, besides the fact that I'm losing my hair, how they say, like, I'm not only president of Hair Club for Men, I'm also a client. Yeah, I'm not only creator of this psychological course, I'm also a client. So I am someone who definitely has suffered from a lot of these things, and I work through them using the treatment. I mean, I've seen some psychological um, webinars and videos, and they're just all garbage. I hate to say that. None of them actually give you real world solutions. I mean, it's very easy for somebody to say you're suffering from psychological toxicity, like I say, or you have you have to work on your psychology. It's so easy to point that out, but when it comes to an actual solution, that's where people just don't know what to do. So what I do is I'm actually creating like exercises and things to read, foods to eat, foods not to eat, believe it or not, um, things to do, exercises that will take you 2 minutes a day that you don't need weights that you could do in the privacy of a bathroom stall or in the room you trade in or at home or in your bedroom or anywhere you want. And things that are like real life solutions because I don't go to the gym. I'm lazy. Yeah, I think I've had like 4 gym memberships in my life. I think my total time in the gym was like 7 or 8 days in total. So like buying the gym membership was, a step that I got to, and going to the gym wasn't. And there's some people who go to the gym every day, and honestly, I have so much respect for those people. But with that being said, um, that would be more of a psychological issue, Eric, and that's why I'm talking about this now. But if you actually go back and you read the videos, you'll see exactly where you need to get stopped out. Taking profit is never an exact thing because the stock could run up forever, right? I mean, you don't know. You have to basically just be in the right psychology that you're happy making money. Let's say like Tilray, again, for example. All right, you could have utilized my strategy, which a lot of people did on Friday, and they made a ton of points. I don't care if you made 75 cents on this trade or a dollar. Do you get that? Like, I'm not saying you needed to hold it for 5 minutes and make 4 points, over 4 points in your favor. I'm saying even if you caught a dollar out of that, that's fine. And many people will be like, well, how do I catch more? And honestly, it's not that important. The first time I stopped caring about my P&L is actually second time I started making 7 figures, 7 figures, 7 figures, 7 figures, 7 figure years. That's how I do it. The first step I did was stop caring about how stubborn I was with a certain position. And yes, like my high conviction name that I'm holding is definitely, I've been sitting in all my shares and it popped up and it exploded up and it's up over 50% since when we were buying. Like, yikes, what a move, right? But, other than that, on the intraday side, I'm just happy making money. As a almost 20-year veteran of intraday trading, not just a market participant, but an active trader for 20 years, I will tell you, I still have days where I make $300, $400, $500, and I'm very happy with it. And I still have days where I'm making 50 to $100,000, and I'm happier with it. But the way I see it is the market is going to come and give me an opportunity. The market is going to come and give me an opportunity. And when it doesn't give opportunity, which I felt was like this entire year so far, again, small sample size, right? Even though I'm having my best start, and that's thanks to a swing trade, has nothing to do with intraday. Um, I would say that if you just take what the market gives you, you're going to be in good shape. And by being part of the Newsbeat live room, believe me, you will know firsthand exactly when the market is ready to give you something. It's what we do well. Art. So it's psychology, Eric, and I'm actually already working on conglomerating a certain something new and fresh out there which nobody approaches with psychology, something that gives people real solutions and answers as opposed to, you know, Again, I love this line, leave your emotions at the door. Okay, I'm a robot. Boop, 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 boop. Emotions at the door. Great, I could trade now. That doesn't help anyone. I'm going to actually give you things that actually help you. Art. Some simple math you did based on the 10 for 14. So, Mark, please verify or correct me. So, if you really did every trade, same amount outlay on each of these trades, and say you made or lost $1,000 on each, fair enough. So 10 times 1,000 is 10,000 profit. 4 times 1,000 is a 4,000 loss. So 10 and 4 is a $6,000 gain. And even with the worst commission rate on earth for intraday trades, you would still be up over 5K on the 14 trades. Would one complain? I should hope so not. You're absolutely right. I mean, obviously. But let's take it a step further. Let's say you're doing like 100 shares and you're risking $100 on every trade. Just to downstep it, you'd still be up $600. Probably more because the Tilray one worked and it would have paid out better than the ones that lost. So you'd actually probably be up well over 1,000. But rough estimate, considering what you're saying, yes. Yeah. So the truth is you're not going to be part of every trade. So let's be 100%, real with that. You're not going to be part of 100% of every trade. But you know what? Because your odds are so good overall, the ones that you're part of, Dave, will end up considering not on any two or three trade basis, but if you take 100 in total over the course of weeks, of these trades, you will be up overall. But yes, you're absolutely right. You're not going to be part of every single one and done and high one. It's just showing you the overall percentage. The truth is, you'll be 2 for 2, 3 for 3 on a lot of these days with a hit rate so high. So you'll actually probably be batting better than every single thing overall. On average, if you do thousands and thousands of them, you should get down to the percentage I'm showing you. I agree, Dave. All right. Keith is saying he uses U stock trade. Um, he spelled it like that, the letter U, stock trade. And he says there is no pattern day trader rules. Again, I don't recommend this website or whatever. I'm just sharing information that people are posting. And he says he uses the U stock trade for the one and done. Do you find it easy to use for one and done? Thanks for sharing that with us indeed. Just stocks, all right. Yeah, I know, Ann. The truth is I do too. Eric, using our methodology, right? Take about 200 shares per trade and you make 100 to $200 for a day. And he's happier than a pig in a suit. S star star T. I think that's a pig in a suit. Because pigs are very happy when they wear suits. It's very formal. Cool. Exactly. So Richard is saying, so again, we have some of the most consistent traders here. You only trade the top and bottom by accident. He takes profits somewhat early, Richard admits, but I get them more often and keep them, which is the most important thing. Richard, obviously, I happen to agree with that completely. Taking profits is the most important thing. Oh, obviously true. Obviously true. The worst thing, Art, is people don't realize how psychological toxicity also works. I mean, what Art is saying, so Art is saying a max loss of 100 per trade is true for a lot of people because they're small. And as long as you stick to the actual plan and know what you're going in, even with psychological toxicity at the start, it would be viable and a bonus. Psychological toxicity with a $500 gain will go a long way to reducing the psychological toxicity. Yeah, and I would say it's even beyond the $500 gain. Like obviously, if you have a $100 risk and you make 500, that's huge, right? That's a huge return based on your risk. But what actually hurts it the most is, let's say a name has an upgrade on it and you know it's bullish, and then all of a sudden you as a trader go in and you short that name, for example. That would cause a lot of psychological toxicity if you lost money on that because you knew you shouldn't be shorting a name that got upgraded. So a lot of times the type of trades you take cause a lot of psychological toxicity. So what I do, what many people don't know, because I'm intertwining analyst and news in the same direction of the stocks you're trading, I'm reducing psychological toxicity for you randomly trading a Microsoft or a Cisco or an Intel on Friday. So excellent point. All right. Mhm. Are there videos out that show how I set up my brokerage account for speed and efficiency with their trading? No. I mean, I think there are videos. I think on one of the evolutionary gatherings I showed it. I do actually. But it only shows a setup for Schwab Street Smart Edge. It basically explains if you could do this on your brokerage or your software, you're good. But I do. There are actually, I forgot which evolutionary gathering video it was where I show my Schwab setup and how I do it. All right. Well, ladies and gentlemen, again, for maximum consistency, we're going to just go back and show you one more time. We showed you how the three trading strategies we apply would have worked on a Friday, which I think is a perfect example of a grind-like slow day. Again, you would have been right 10 for 14 if you applied every one of these strategies. These strategies, if you want to know what the one and done is, or the high one, low one, or the high five, low five, there's a description. There's a link in the description of this video. If you have any questions, if you want to know the answer to something, just post a comment. Tell me if you like these videos. Tell me if you like the direction in which I'm going, which I'm actually trying to show you what works in this current environment with the market grinding, how you can make easy alpha intraday and be consistent at it. There's always money to be made in the market. You have to evolve with the market. People say that all the time. I am showing that's why it's the evolutionary gathering. I'm literally showing you how I'm evolving with the market, what I'm going to be doing, and how I'm going to continue making money on a day in and day out basis. I hope you guys enjoyed the evolutionary gathering. Happy trading, make money. I'll see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful, wonderful Sunday.